Good day, I'm Abolore. On today's episode, we are going to be looking at the continuation of accounting errors. So, in the previous episode, we've looked at errors that will not be disclosed by the trial balance or errors that will not affect the agreement of the trial balance. So, on today's episode, we'll be looking at errors that will be disclosed or that will affect the agreement of the trial balance. So, uh, first thing first, let me paint a scenario of how that is going to look like with respect to errors that affect the agreement of the trial balance. So here, let's say we have trial balance, then we have debits, credits. So this is what we have. So if we have, let's say, 300 here, we are going to be having, let's say, 250. So what this means is that the two sides of the trial balance is not equal. And obviously, what this means is there are some errors that have been made in the ledgers that were stated in the trial balance, and which makes the trial balance, that's the two sides, not to be equal. So today we are going to be looking at those errors. Then we talk about suspense accounts, then journal in short, as well as narration, which is often made when an error is corrected on the journal. So let's talk about those errors. So when the two sides, I repeat, when the two sides of the trial balance is not the same, it means there are errors in the books, and those errors are called errors affecting the agreement of the trial balance, or errors that will affect the agreement of the trial balance. One, errors that will distort the agreement of the trial balance, or errors that will not make the trial balance, the two sides of the trial balance not to be the same. So those are uh, other ways you can, say errors that will be disclosed by the trial balance. So let's list them and explain them. We're going to be explaining each of them, as well as talking about the treatments of each and every one of those errors you are going to be listing on the board. So when any of these error occurs, they will find their destination in the suspense accounts. Although some other ones we talked about, that means those errors that will not be disclosed by the trial balance. Some of them, the treatments of some of them, we make them also to find their destination in the suspense account. But basically, all these errors that we're about to list, they will find their destination in the suspense account. So let's begin with, so we have errors that will affect the agreements of the trial balance. Errors that will affect the agreement of the trial balance. So we have the first one. We have error of transposition. Error of transposition. That's the first one. So error of transposition, when it occurs, it will affect the agreement of the trial balance. And error of transposition occurs when the position of figures in the accounts have been interchanged. That means you've interchanged the figures and you've recorded it. You've used it to complete the double entry for a particular business transaction. So this is what that means. Let's say, for example, we sell sales. Let's say sold goods by cash 110 naira. Look at this. The two accounts involved here is sales and cash accounts. So in this case, you have open sales accounts as well as cash accounts. This is cash accounts. This is sales accounts. Sales accounts will be credited and cash accounts will be debited. So you have successfully debited cash with 110, but crediting sales now, you now interchange this figure by crediting sales with 101. Look at this. You can see that the position of the figure in sales account are being interchanged. So the recording was accurate in cash account, but in sales account it had been interchanged. So what this means is that error of transposition will lead to overcast or undercast, like we did talk about when we were treating those ones that will not affect the agreement of the trial balance. That's error of original entry. So this will affect the agreement of the trial balance because you are having on the debit side 110 and on the credit side 101. So these sales accounts had been undercast by 9 naira. So that's 110 minus 101. That's 9 naira. So to correct this error now, that means sales account has been undercast by 9 naira. That's basically what that means. So to correct this error, you will have to credit sales accounts with 9 naira so as to increase the balance from 101 to 110. Then the corresponding debit entry of that will go to suspense account. So you are going to have suspense accounts. So suspense account. Then you are going to credit these sales with 9 naira. So you have 9 naira. Then the total balance here, which is balance carried down in sales account, that will be 110. Then you have 110. You have 110. So this is what you have. Then the corresponding debit entry of this credit entry of this 9 naira we go to suspense account. So you are going to have the particular to be sales. Then you have 9 naira. So this is what you have. So the error has been corrected. So any error that affects the agreement of the trial balance, all of them will find their destination in the suspense account. And we are going to be looking at suspense account as we go further. So this is error of transposition. Error of transposition occurs when the position of figures have been interchanged. And you can see now 110 had been interchanged as 101. Or perhaps you have 565 had been interchanged as 556. This is error of transposition. Instead of you recording this, you've recorded this. I hope that is understood. Good. So now I have error of single entry. Error of single entry. Single entry. That's the second one. So let me cover up this part. So with respect to error of single entry, from the word single entry, that's one, the double entry system of accounting have been violated. That's a drag concept, which states that every transaction must be recorded twice in the book of accounts, the double entry system of accounting, which was postulated by Luca Pacioli, an Italian man. So he's considered to be the father of accounting because he postulated lots of concepts which form the basis of financial accounting of today. So that double entry system of accounting has been violated, or the drag concepts. The double entry system of accounting gives birth to drag concepts, and drag concept is about every transaction must be recorded twice. That means a transaction must have a debit and a credit entry. So in this single entry now, you have only recorded a transaction once. The second entry wasn't made or wasn't found elsewhere. So let's take, for instance, we have sales by check. Sales by check, 20 naira. Look at this. The two accounts involved in this is sales accounts and bank accounts. So you are going to credit sales and debit bank. So sales accounts and bank account. So you credit sales. Sales account will always be credited because it is an income account. And that's why it's very important and necessary for you to go and watch the double entry system of accounting of our video as well as trial balance. It will, I can guarantee you, it will enhance your uh, full understanding of error as a topic or accounting error. So sales account to be credited and bank account to be debited. But unfortunately, only sales accounts was credited. So here we have bank accounts. Look at this. So only sales account was credited with 20 naira. Look at this. This is what we have. But bank account was not debited. So in your trial balance, we only have 20 naira on the credit side, but no 20 naira on the debit side. So the agreement of the trial balance will be affected to not be the same. So to correct this error now, it means you will have to debit bank. That's the remaining corresponding debit entry. You have to debit bank. Then the corresponding credit entry of this debit entry, which have been made in the bank account, will be made in the suspense account. So you have suspense account. This is suspense account. Suspense account. Then you debit bank with 20 naira. That's the particular is going to be sales. Then the corresponding credit entry of this will go to suspense account. So you are going to have it. The particular is going to be bank. Then you have 20 naira. So this is what you have. So for every debit entry, which is the remaining entry you have to make with respect to only sales, which was credited, you have to make the debit entry. Then the corresponding credit entry of this debit entry, which was made in bank accounts, will be made in the suspense accounts. So you can see now that any error that affects the agreement of the trial balance will find their destination in the suspense accounts. So that's with respect to that. So I hope this is understood. Good. So let's take the next one. So 3 now. We have error of partial reversal of entry. So that's the third one. Error of partial reversal of entry. From the word partial, this one occurs when you have, although it's also called error of partial omission. Yeah, error of partial omission. And it occurs when two accounts, in every transaction, don't forget, you must debit one account and credit the other account. So in a transaction now, you have debited one account and you have also debited the other account, or you have credited A's account and you have also credited B's account. So this error of partial reversal of entry occurs when the double entry principle have been violated. And don't forget, your double entry principle states that for every debit entry, there must be a corresponding credit entry. And for every credit entry, there must be a corresponding debit entry. So you have violated the double entry principle by debiting one account and debiting the other account. Or you credit A's account and also credit B's account. So look at this now. Let's say, for example, we have purchases, purchased by cash, 10 naira. The two accounts in this transaction is purchases accounts and cash accounts. So you are going to debit purchases and credit cash. The credit cash with 10 naira. So let's open this. So you debit purchase, this purchases account, you debit it by 10 naira. Instead of you to now credit cash account, you now debit cash account again with 10 naira. Look at this. So in this regard now, one of the entries is correct. Let's say purchase account is correct because purchase account ordinarily will be debited, but cash account should be credited. But you went ahead to what? To credit, to debit cash account. So there is a mistake here. There is an omission here. Sorry, there is an error here. So to correct this error now, first and foremost, the debits ought not to be here. It should be credits. So what you are going to do, just like we did with respect to error of complete reversal of entry, whereby we multiply the wrong amount or the wrong account that was perhaps debited or credited by 2. The same thing we are still going to be doing here. So we are going to multiply this 10 naira by 2 and credit this cash account. And that's 10 times 2. That gives us 20. So this 20 we have here, 10 naira will cancel out 10 naira. Then you are left with 10 naira. And that 10 naira, okay, let's balance this account now. You have balance carry down. That's 10. Then you have 20, total 20. Then this 20 now, you have 20, 20. Then for every balance carried down, there must be balance brought forward of 10. This is what you have. So this is the normal balance that ought to be in this cash account, which is credit balance, because cash is paying and every giver must be credited. So you are having a credit balance. So this is intact, but you are having issue with this. So the correction of this cash account is that this 10 naira ought to be on the credit side, but it was on the debit side. You multiply it by 2, credit it. Then when you balance off the account, the balance carried down, the balance, this 10 naira. Then since you have credited the cash account with 20 naira, then the corresponding debit entry of this 20 naira will go to suspense account. So you have a suspense account. You have suspense account. Suspense account. So the corresponding debit entry of this will now come. The particular will be cash. So you now have cash. Then you have 20 naira. This is what you have. So that's the correction of error of partial reversal of entry. It occurs when the double entry principle are being violated. It's either you have debited 2 accounts twice or you have credited 2 accounts twice. And that means you are debiting twice or you are crediting twice instead of it to debit and credit. So you are debiting twice or you are crediting twice in a single transaction. So that error which you have committed is called error of partial reversal of entry. That's that. So I hope that is understood. So any error that affect the agreement of the trial balance, we find their destination in the suspense accounts. Then 4 now, we have casting error. Casting error. So casting error, let's talk about that. So from the word casting, casting means is either you have increased the figure which ought to have been recorded or you have decreased the figure which ought to have been recorded. So casting can either be overcast or undercast. So depending on the error that is made. But let's take a look at overcast. Let's look at any of them. Overcast. Let's say for example, debtor balance of 1,000 naira was brought forward as 1,200 naira. Look at this. Debtor balance of 1,000 naira was brought forward as 1,200 naira. This is an error. That means ordinarily the debtor's account ought to have, the balance in the debtor's account ought to have been 1,000 naira, but mistakenly 1,200 naira was brought forward, was written as the opening balance in the debtor's account. That's what it means. So here now we have debtors. This is debtors. So debtor is an asset, is a component of current asset, and all assets are debited. So this is what we have. So we have balance brought forward of 1,200. Although it should be 1,000, but 1,200 was brought forward. That's what we mean. So What this means is that the debtors account had been overcast by 200 naira. 200 naira. So we have to reduce this debtors account by 200 naira. And how do we reduce it? Very simple. I did say that if an account has a debit balance, if you want to reduce it, you credit it. I also emphasized that if an account has a debit balance and you want to increase it, you debit it more. So debtors account has a normal debit balance because it's an asset. So for us to reduce it with this 200 naira now, by which it had been overcast, we credit it. So we now have 200 naira here. This 200 naira by which it had been overcast. Then if you want to balance this now, we have balance carry down. We have 1 2 minus 200, that's 1000. Then 200 plus is that's 1 2. And bring this down, that's 1 2. Then for every balance carried down, there will be balance brought forward of 1000. So the normal balance that ought to be in the debtors account is now normalized now. It's been corrected. This is what we have 1000, sorry. So this 1000 is in tax now. Now, the corresponding entry of this credit entry, the corresponding debit entry of this credit entry will now be made in the suspense account. So you have suspense account, suspense account, suspense account. The corresponding debit entry of this credit entry, which was made, the debtors account, will be made in the suspense account. So which account are you bringing it? You write debtor, sorry, debtor is the account which you are bringing it. Then 200. That's what you have. So it's been corrected now. This is how you correct this. And if it is under charge also, maybe 1000 naira was brought forward as 800 naira. If it is 800 naira, you write that 800 naira here. Then it's been undercast by 200. And since debtor balance has a debit balance, and if you want to increase an account that has a debit balance, you debit it more. So you are going to debit the debtors account with 200 naira. So 200 plus 800, that will give you 1000. Then that's 200 naira. Since it is recorded on this debit side, the corresponding credit entry of that 200 naira will be in the suspense, credit side of the suspense account. So that's basically if it's error of undercast. So that's with respect to uh, errors that will affect the agreements of the trial balance. Then number 5, most times this one is self-explanatory. Omission of balances. Omission of balances. Balances when extracting the trial balance. Omission of balances when extracting the trial balance. So this now, while you are adding and subtracting, you may omit one of the balances. So with that, it will not make the trial balance, the two sides of the trial balance, not to agree or be the same or equal. So this one is self-explanatory. While you are adding the debit and the credit side, you may omit one of the figures or balances there, and that will not make the two sides of the trial balance to be equal. So these are some of the errors that will affect the agreement of the trial balance. So we have successfully talked about 2 categories of error. In our first episode, we've talked about errors that will not affect or that will not be disclosed by the trial balance. And now we are looking at errors that will affect or that will be disclosed by the trial balance. So now we want to look at narration as well as suspense account. Although you've had a nodding acquaintance of what suspense account is about, but we are going to look at them in short now. So let's look at those two. So recall that when the two sides of the trial balance fails to agree, the difference between the two sides will be taken and stated in the suspense account as a difference or balance brought forward, whichever way. This is what I mean. So let's say we have trial balance and we have debits and credits. This is what we have. Then let's say here we have the 1000. Then here we have 800. So in this case now, to make the debit credit side equal to the debit side, so here we have particulars. Then here now, we're going to have suspense accounts. So suspense account, we are going to put 200 here to make the credit side equal to the debit side. So here we have total 1000. Here total 1000. So the difference between these two sides, we have uh, written it as suspense account. So this suspense account, we are going to open it. Then we have suspense accounts. Suspense accounts. So what side is the balance? That's credit side. Then you have balance brought forward. That's 200. So suspense accounts, most times they call it a temporary account. It's just a short, is an account that is prepared temporarily to record the difference on the two sides of the trial balance and to correct errors that affect the agreement of the trial balance. And most times, errors that do not affect the agreement of the trial balance, like I've explained. So now that you've put the difference on the trial balance here, any errors that you have noted, like all those suspense we are opening, suspense accounts, you bring them, whether it's going to be on the debit side, you state it here, whether it's going to be on the credit side, you state it there. And like that, till you correct all those errors. So you are going to open these accounts temporarily, pending the time, pending the duration you were able to locate all those errors, and also you were able to correct all those errors. So that's basically what suspense account is meant to do as an account. So it's a temporary account that is open to record first the difference on the two sides of the trial balance, as well as when the errors will be located and corrected on the suspense account. So it's open to record the difference of the trial balance as well as correction of errors that affect the agreement of the trial balance. So that's basically what suspense account means. So let's talk about narration. 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 So narration, you also need to understand it, because if we want to correct error, we have to raise a journal. And after each error had been corrected, you will have to make a narration. And that narration is about what the error that has occurred is about. Is the error of omission that you have that has occurred and that you have corrected as an accountant? You have to state it there. Is the error of partial reversal of entry? Is the error of single entry? Is the error of compensation? And so on and so forth. So a narration is a brief description of the errors that has been corrected on the journal. So this is what narration is about. Look at this. Let's say, for example, okay, excuse me. Let's say we have okay. So let's say this is how a journal looks like. So journal is used to correct errors. So this is journal. So most times we have particulars. You could have dates as well. Most times date, particular, then you have debits and credits. Most times you have folio. Folio, then so this is a journal. This is a journal. So this is what we mean. Look at this. If let's say, for example, uh sales sales by cash, sales by cash 100 naira was completely omitted, from the books, from the books was completely omitted from the books. Look at this. This is a transaction and it's error of omission because we were told that the transaction was completely omitted from the books. So which account do we debit? We debit cash and we credit sales. So we come. If you are recording on the journal, you must make sure you pass the debit entry before the credit entry. Yeah, it's one of the properties of recording in the journal. You make the debit entry before the credit entry. So if you want to record this in the journal, you're going to have the debit entry comes first. That's cash accounts. You debit it, 100 naira. Then sales. Then you credit it, 100 naira. Then you are going to make a narration. Let's say this is January 1. You are going to make a narration after you have corrected the error. This is correction of error. We have corrected it by passing the normal entry for this transaction which was omitted. So we are going to make a narration. So the narration is usually short and precise and it must begin with being. So being an error of, which error uh, occurred here now is error of omission. So you start with being and it must be short and precise. So being error of omission corrected. So you have successfully corrected this error now. So look at the narration now. Being error of omission corrected, because this error that we have recorded here is error of omission. So a narration, I repeat, a narration is a brief description of the transaction or error that had been committed, that had been corrected on the journal. And each narration must be short and precise, and it must start with being. So being error of, if it is error of compensation, you have being error of compensation corrected. And that's why you have to learn all those errors offhand. You have to understand them offhand because each time you are given an error which has occurred, you must be able to know that, oh, this is error of original entry. So for you to understand and learn all those things, you need to go back to watching the videos over and over again, and before you know, you will learn and understand them perfectly. So for you to be able to make, because most times after you've corrected the error, you may make a wrong narration as a student. So for you to be able to make a narration, it means you understand that particular transaction and the type of error that transaction or the type of error that has occurred regarding that transaction. You understand it very well. That's what it means. So making a narration is not really an easy type, but it's very simple. Basically, we are going to be solving a question on error in our subsequent episodes. So this marks the second episode on accounting error. So at this juncture, I'll be dropping off the conversation. So if this is the first time you are watching our video, please subscribe to our YouTube channel, ring the notification bell so that each time we produce a video, that will come straight directly to your smartphone, to your laptops, your desktop, and to whatever gadgets you use. And also to those that have been supportive by helping to share our videos, I say kudos to you all. Keep sharing because no one can tell whom you are helping by sharing our videos to your friends, your families, your relatives, and all that. Let's make the community more robust. Let's have your comments, your complaints, your praise words and all that on our comment section. So from me to you, I want to say thank you all once more. So I'll see you on my next video. Do have a good one. Bye bye.